All right. Hey, everyone. Mark here. All right, let me get this thing set up right. All right. Hey, everyone. Mark here, Mark P Markets. Thank you very much for taking the time to join me today. I'm sorry I'm running behind. I usually start a half hour earlier. I've been having internet problems all day today. So just let me listen very carefully. If this thing gets cut off, which is very possible, wait about 3 minutes and then refresh your browser and I should be back on. My internet seems to cut off for about 3 or 4 minutes and then it just comes back on. What am I going to do? Okay, so anyway, I apologize for that, but that's what's going on. All right, so now you know. All right, so again, welcome to my stream. If you're new here, let me explain how this works. All right, so first, I'm going to go over the economic calendar, all right, which you should all do every Monday, especially this week. We'll talk about that. After that, I'm going to get into the Bitcoin analysis. As you can see on the chart here, there's been a lot of drama and there's a lot of people that are confused about this. So we're going to talk about the game plan for the meeting on Wednesday. Okay, so that's specifically what we're going to talk about in this stream. And then after that, I'm going to answer your questions. Okay, so hold on. Let me just pull this over here so I can see what's going on over here on TradingView. I am simulcasting on TradingView. All right, so if you can't see me there for whatever reason, just refresh the browser. Okay, that usually solves the problem. And now would be a good time to share your questions. So if you'd like to see a stock or if you'd like to see an altcoin, please put your question in the chat and I will get to it when I get to the Q&A portion of this stream. The stream, I try to keep it about at an hour long, just so you know. Okay, so with all that said, also, if you'd like to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Okay, so let me just, let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, I don't know if anyone was able to catch the trading battle over the previous Wednesday. I'd love to get some feedback on that, see what you guys thought. It was me and Trader Nick and Boris Schlossberg talking about prop shops or prop firms. Anyway, it was interesting. And they said they'd like to have me back on there again. So that's cool. Anyway, I hope you guys caught some of that. So let me say hello to some of the people here. I got Steen, good to see you. All right, Alex, all right, good to see you. From Romania, Eligius, Mr. Plow. Okay, cool. Armin, good to see you all. And here, let me just make an adjustment here so I can see what's going on here over on TradingView. All right, so when you guys start asking questions over there, I can answer them. Also, really quick, just so you know, my auto setups for Bitcoin and the altcoins, the system is working now, okay? The notification system. It took me a while to get that going. The signal system or the analytical portion of the system, that's been working. It's just been getting the delivery notifications into the channels. That is working now. Also, I'm going to change the name because auto setups, when I say auto setup, people look at me with this puzzled look. First of all, most people don't know what setups are. And when I put the word auto in front of it, they think it has something to do with a car. So I'm going to change it. It's not the most creative name in the world, but I'm just going to call it Trade Scanner. Okay. So my Trade Scanner for the coins and for the stocks is pretty much working now. So if you have any questions about that, please send me a private message or send me an email. I'll be happy to answer that. That's available to most of you are members, so most of you will have access to that. They are in specific channels, okay? And I'm going to make a video now that I've got the delivery portion working properly. I'm going to make a video on how to use this information because this is not a gimmicky, buy here, sell here type of thing. That's a very hard thing to produce. And most people, when they produce those things, they're just gimmicks. My thing is, essentially it's a screener. It's an automated screener, and it takes my personal criteria that I look for in the markets, and it basically makes you aware of potential opportunities that you'd otherwise not be aware of. Okay, so it's some very valuable information, and I'm going to show people how to turn it into a trade idea. Okay, because it's basically a raw trade idea, and you take it and then you assign orders to it. That's basically what your part is, and you have to understand how it works so that you can do that properly, okay? Because again, the name of the game is risk management. If you don't do that right, it doesn't matter what you do, you'll fail, okay? So anyway, all right, so let's get started with this first thing. Let's talk about the economic calendar. Now, TradingView, of course, has its own economic calendar, so you can use that. But have you guys looked at the economic calendar for this week? Let's see what I see in the chat here. Anyone? Hey, Burak, how are you? Anyone know what's going on this week on the economic calendar? You guys want to chime in on that? I don't see any comments about it. Anyone want to say anything? I'll wait, because you guys should be in the habit. You shouldn't just wait for me to just, talk about the economic calendar. You should be aware of it. So what's going on this week? Who can tell me? Anything? Anything important? I don't see anyone here in TradingView. You guys are over there, man. Now would be a good time to say something. Anything? Let's see what you guys say. What's on the economic calendar for this week? You guys tell me. At least give me one event. FOMC, yes. Jack Sloan, you got it. Okay. PPI, core inflation. Steve, I don't know where you get PPI from. I have not seen PPI. I saw durable goods. So let's talk about the economic calendar, right? So first things first, we have on Wednesday, okay, which is the 23rd of March, we have the FOMC. That's the biggest thing going on, okay? In light of all this bank drama, that's a big deal, okay? Because Chairman Powell, his comments or what he says in his press conference may be affected by what's been going on with these bank vulnerabilities, okay? So the problem that we're facing here is inflation on steroids. If he's forced to be dovish, you're going to see Bitcoin continue on this vertical route. All right, you're going to see the stock market get strong. You're going to see all this stuff, but it's not a healthy strong. It's strong as a result of inflation hedge. You're going to see gold go berserk, right? That is if he gets dovish. Now, from what I understand, he's expecting to raise by 25 points. Okay, I believe that's the expectation, possibly 50 points. If he changes his tune, or if he makes some adjustments that were not expected and they're dovish, right? That's what you have to watch out for. Now, on the other side of that, if he says something hawkish, or he goes 50 basis points, or his comments are very hawkish, and basically if he says something like, look, the banks are not my problem, we have inflation problems. I mean, if he goes that route, you're going to see retrace. You're going to see correction, okay? Most likely, or at least a muted move higher. Either way, it's probably going to get very erratic. So we'll talk more about that here in a moment when I get into the Bitcoin chart, so that we have our strategy. What is that? The 22nd PPI core output, or is that just I don't know, PPI core output? I haven't seen that on my calendar. So the 22nd, that's on Wednesday also. Maybe that's part of the FOMC thing. I don't know, but I had not seen a specific PPI number for that. Now, so all of this is on Wednesday, right? So we're going to talk about this effect going into Wednesday, because it's going to have an effect on the way volume is flowing through the markets, whether it's Bitcoin, whether it's the dollar, whether it's S&P. You need to be aware of that. So we're going to talk about that, but let's talk about a couple other events we have this week. We have Thursday. We have this, I believe it's the Swiss National Bank and the Bank of England. On Thursday, they have their rate announcements. Now, of course, we saw some drama with the Swiss banks, so there may be more attention to that than usual. I don't know. Usually, these other rate announcements don't really carry a lot of weight, but this week they might. So you want to be aware of that. That's on Thursday. And then on Friday, we have durable goods, okay, which, is not usually a big number, but you want to be aware of it, especially if you're involved in Forex, okay, and the dollar. All right, so those are pretty much the main things. Oh, Steen, okay, cool. See, I don't look at that calendar, but I have not seen that news item specifically, so I'm not sure why I don't see it on my calendar. But if that's there, I mean, PPI is something you should pay attention to. So thank you for pointing that out. Again, any surprises in these numbers can cause erratic moves during the day, especially when they come out, right? Like some of these numbers come out at 10 a.m. Eastern time. Some of these things come out at 2 p.m. Eastern time, like the FOMC meeting is usually 2 p.m. That's when they make the announcement. And then they have a press conference at 2:30. Okay, that's usually how that goes, and that's where you could see a lot of action. So let's get into that. Malal, hey, you have to refresh. You have to refresh the browser. Okay. Hey, Tony from London. Oh dear, another Londoner. All right, welcome. Yeah, if you can't see me, just refresh the browser. Okay, that usually solves the problem. All right, so that's the economic calendar. So the main thing this week again is the FOMC. Let's talk about why that's relevant to this Bitcoin chart. And let me make the Bitcoin chart bigger. All right, so you guys can see what's going on here. All right, so first things first. We had talked about, a week ago. I mean, things change fast, right? If you read my TradingView article, by the way, I talked about some key levels, right? We basically 25K was a key level. We never went back below 22K. And then this thing just basically, this thing just squeezed straight to the 28K level. I mean, this line has been here. This 28K resistance line has been on my chart for quite some time. You can look back. I've talked about it a number of times. I mean, we stopped right to the point there, right? So it's not like I have some kind of magical tool to figure that out. This is just historical resistance. That's all it is. And there's a high probability that price will find resistance there or a supply of sell orders, okay, which clearly is the case. Now, the key to this situation, especially going into the FOMC meeting, is you have to understand here. Let me pull this up here. I want to, I guess I can use the brush, right? You have to understand what we are facing. So first I want to mention, going into the meeting, volume is likely to shrink across the board. Okay, that means tomorrow afternoon, Wednesday early AM, you'll probably get some action at the open, but after that, it's going to get quiet. Not a good time for day trades, okay, when you see that type of action, because things are very erratic and there's no follow through. Often large players, they pull back. They don't want to get involved until the news is out of the system. So when the news comes out, all right, the idea is not to trade the news. The idea is to let the market figure it out. So really on Wednesday, if you're going to day trade, you should probably wait until 3 o'clock, okay? Because by that time, the news will be out and the market will be adjusting, whether that's bullish or bearish. There's no way to know. But this is what you should know in advance. Let me point this out. What you should know in advance, okay, is you should know your levels, okay? So let me pull this up first. Right now, we need to know our support and resistance levels for Bitcoin. It's that simple. There are no opinions here. Don't have an opinion, okay? Because opinions will screw you up. There's a lot. I'm starting to see the headlines on the YouTube videos. Bitcoin going to 1 million. Like, here we go again. People haven't learned the first time. Why do they come out with that headline here? Where were they back here when Bitcoin was touching 19K? Okay. So please don't get lured into that nonsense. Number one. Number two, don't have an opinion and do not react to anything. If you're sitting here all anxious because you're like, man, this thing looks strong. I can't help myself. If you can't control your own behavior, you failed and you will never win. Okay, so the number one thing in this game is you have to be able to control your own behavior. So let's talk about levels so that you can be better prepared if Bitcoin revisits one of these levels, because that's the best we can do. We have to be prepared and we have to be a step ahead of the market, not reacting. If you're reacting, you're a step behind. If you're buying right now, all you're doing is taking the risk off of someone's hands who bought it earlier. By the way, my trade scanner thing actually called Bitcoin long over here. Okay, it never went into the channel because my notifications weren't working yet. But when I looked back at the history, I saw like, oh, that would have been a nice long. It would have been a risky location, but the thing is, it recognized it. Okay, so like I said, I'm going to make videos about how that works. It's a trend following system, so it's never going to call counter trend trades. Now, anyway, so a couple of facts that we can take from this. This right here, momentum is bullish. Trend is bullish. Short-term trend is bullish. Okay, nothing bearish about this. Broke 25K. That was a significant resistance level. Now, as my students know, this is our next support level, 25K. old support becomes new, old resistance becomes new support. So what we want to see going into the meeting or as the meeting unfolds, if we get a test of that level, which is very reasonable, that's where you want to be looking for longs, okay? Not here. Now, of course, if you're looking at day trades, that's another story. I'm referring to a swing trade strategy here, okay? So you want to see a pullback. Now, 25K needs to be held. Now, 25K doesn't mean exactly 25K. It could be 26K. It could be 26,500, okay? That entire area, this entire area could basically be an area of support. So you have to see how the market behaves there. Now, the strategy that you use also is going to depend on the time frame you're looking at. If you're looking at a smaller time frame, you can find, or you're looking for setups, right, in such an area. But if you, for example, if you're using like a 1 hour chart, you should not be expecting a 3,000 point move working with a 1 hour chart. Okay, everything has to be within proportion, just so you know. But this is the key support level, 25K. If for some reason 25K is cleared to the bear side, meaning it breaks and we get a close below 25K, stay away from this thing, okay? Because that support, if this trend is going to stay intact, that support should hold, okay? If that support is compromised, that says that this is not really a bullish trend. This is likely a consolidation. That's what that will say. Now let's talk about the wave count here for a moment, because this is why I always urge people not to get married to wave counts. In my previous analysis, I talked about that this was a wave, right? This is a possible A wave after a 5-leg impulse structure that we have all the way from December, right? So this structure right here is an A wave. I was saying that this is possibly a B wave. Now, this is a little, for a B wave, this is a little exaggerated for a B wave. Like B waves typically don't go this far, okay? That's far. They usually go like maybe a certain area, like above the high, like something like that, and they turn. This, I don't think this is a B wave. That argument is very weak. Although I can count 3 legs in here, right? This is like the first leg, the second leg is this little consolidation, and this is the third leg. Yes, it has that, but man, this right here, this move is confusing. So I wouldn't classify this as a B leg, and I wouldn't be in a hurry to get short here as far as swing trades go. Okay, so if that's not a B leg, then what is this thing? This could be possibly the first leg of a broader wave 3. Now, I don't like to talk about that because then I'm going to sound like one of these experts that are calling for Bitcoin at 100,000. But if this is leg 1 of 3, a broad magnitude 3, as we know, wave 3s are typically very dramatic and they're very big usually. On this magnitude, if this is a wave 3, and this is the first leg of it, meaning we have 4 more legs to go, you're looking at 70K, okay, possibly. But again, understand your macroeconomic context. You can't just count wave counts because markets are random, right? There's no way to know. The amount of time that it would take for such a move to unfold would mean that, I mean, basically it would mean that we have hyperinflation in this country, and gold should be pushing 5,000 too. Like, because this thing's basically, it's a dollar move, right? It's an unstable dollar move. That's what, it's a rush to safety. So that would mean that that would be the stimulus for this to continue. I don't know. Okay, I mean, so that's why I would not get married to that wave count. In those situations where, like, man, that seems a little unrealistic, right? That's my first thought. Then I resort back to levels and structure. So if that's the case, then all I'm interested in, to keep it simple, because less is more in this game, is I want to see support touched there, and that's it. That's all I want to see. Okay, that will prompt me for a swing trade long if we get that. Now, as far as shorts go, I'm not interested in shorting this because right now this momentum is pretty clearly intact. I'm not going to fight it. Now, in order for me to go short something like this, we have the level, okay? We have the level, but I'm going to have to see a lot of confirmation. I'm going to have to see price play around here for a week or something. I'm going to have to see a failed high. I'm going to have to see a pin bar. There's just a lot that I'm going to have to require of the market. And that mentality, you may say, oh, well, you're going to miss the move. that mentality prevented me from shorting this. Okay. In fact, someone asked me a question about this pin bar over here, and I don't know if I ever had the time to respond to that question, but I remember what the answer was. I may have sent you the answer, but the question was, is this a pin bar to short? And I said, no way. Okay, or I knew not to short this. I never called any shorts on this because this type of move going into it, even though we had the pin bar and we had the level, the move was too dramatic, and you have to respect the momentum. Okay, you have to respect this momentum. So that's why I require more than just a single pin bar. This trend is not exactly bearish. That's the thing. Okay, this is not bearish. So with that being said, I'm steering clear. I'm going to be extremely conservative with shorts, and which means it's going to require a lot for me to call a swing trade short. Now, I don't short it myself, but I'm willing to call it. I managed to call this one short over here, okay, weeks back, what was back in February, whatever, and I had the order in advance. All of you who have access to that, you know what I'm talking about. The order was to get out at 2150. Good thing I had that order in advance, because if you had stayed in that trade would be a losing trade. Okay, that's why you have to respect your targets and take your money when you have it, when the reward risk makes sense, because you just don't know when something like this is coming. Anyway, the main factor that keep in mind, so we have our levels, we have our game plan. FOMC is either going to pull this thing back, okay, or maybe we get no pullback. All right, because maybe he's dovish or whatever, and we start to see a vertical move like this. If we see that type of vertical move, I'm not touching it, okay? Because the higher this thing goes, the more risk you're taking. I'm not taking any kind of longs up here, not as a swing trade anyway. If you're interested in a day trade, that's another story. But as a day trade, you're only looking for a couple of hundred points, not a couple of thousand. So this is a high risk area for swing trade longs. It's not bad for day trades, but you have to understand, you have to have the right mentality and the right expectations, and you have to have a very specific system for determining your risk and reward and things like that. Everything has to be proportional. If you don't have that, don't day trade. Okay. All right. So that's my Bitcoin analysis. I hope you guys find that useful. Let me know if you have any questions about it specifically. Now, let's jump over to my Q&A. Let's start talking about questions, and let's start answering questions about the markets you want to see. All right, so and real quick, by the way, before I jump over to your questions, let me move this here for a second. Let's just take a look at a couple other markets real quick, all right? Because in these situations, look, there's a lot of bank drama. I looked into the whole SVB thing, right? So I understand what the problem is over there. And if that continues, I know there's a lot of vulnerabilities in the banking sector. Our opinions don't matter. If the Fed can't contain this and the Fed has to be dovish, we're just going to see more inflation. If we see more inflation, these inflation hedges are going to continue their way. It's that simple, okay? Don't get caught up with the opinion. Pay attention to the levels, okay? And be ahead of the market. Now, let's take a quick look at the bond market, all right? So the bond market, look at this. This is a ridiculous move for the bond market. The bond market never moves like this. And when I saw this happening, I'm like, man, what's this about? And I realized, this is a move to safety. Look at this. The bonds, just a matter of a couple of days, made up a few weeks of these rising rates. I mean, just a couple of days, the rates went back to, where they were. So as you can see, there's resistance here, right? On the bond market, there's resistance. We can't make any judgments on that yet until we see the outcome of the FOMC. But if this breaks and this continues higher, and I pointed this out like a week ago, if this thing breaks right here, where's my brush on this thing? Oh, right here. So if this thing goes like this, right, we get like a pullback here. Let me draw this right. We get this thing pulls back and then works its way up to here like that. See that? And we see a bond market rallying like that. That's inflation. Okay, that's rates going lower, which is going to mean that stocks are probably going to find a bottom, but not for a healthy way. Okay, there's nothing healthy about that. Just like similar to the Turkish stock market, you guys remember? I know many of you used to ask me about the Turkish stock market, and that stock market looked super strong. but it wasn't because of the internals of the stocks. It was because the Turkish lira was losing all of its value, right? That's what we're looking at here. Okay, so that's the bond market. Now the dollar, this is the US dollar index. It's not pulling back as dramatically, but it's pulling back. I mean, what are we at, 103? So dollar weakness, I don't see any reversal happening there, right? So we're still facing dollar weakness, which puts a bottom into everything, right? The dollar keeps going lower. We're looking at, inflation, right? Which means rising prices everywhere. If we're looking at it real quick, let's just take a look at gold, XAU, USD, right? I mean, look at this. Does that not look exactly like Bitcoin? So in these situations, people get very dramatic. Here's the weekly chart. People get really dramatic. Don't be buying gold here. If you're not long gold, don't be buying gold now. This is a place to take profits on gold, right? And or keep it as an inflation hedge if that's what you're doing with it. But now is not the time to put risk on in gold. All right, anyway, so just wanted to run through those markets real quick. Let me start answering some questions. So Stian, what do you think about Alphen on the Euronext? It is currently at a support zone, okay? Not completely clear on the waves because the 10th of November was, okay, should we wait? Okay, so Steen, a couple of things. Let me pull it up. Alphen, and it's on the Euronext exchange, okay? So let's pull this, let's go to the weekly chart. If you're unclear on the wave count, if you're unsure of the wave count, then skip the wave count, okay? Don't let it confuse you because you're better off resorting to structure and levels anyway. The wave count provides value when it's clear. So you're either looking for 4 waves or you're looking for 5 waves. That's when it's crystal clear. Otherwise, don't get mixed up with it, especially in corrective waves. All right, it'll just confuse you. All right, so what do we have here? Let's take a look. So we have on the weekly chart, now Alphen, look, so you are at a support level. I see a weekly pin bar developing here. But here's the thing, Steen, so you are fighting a generally, this structure is not bullish, okay? That's bearish. So you're fighting that, first of all. Now you are in a location where a long is feasible, right? You have look at this, you have a failed low situation. I mean, look where you are relative to this low. So if you're looking for a temporary swing trade long, which would be aggressive, I mean, this is the area you're looking at, but you're fighting a generally bearish trend, a bearish structure. So this thing doesn't have to, its chances of testing this high are much less likely, right? It's more likely to produce a lower high unless it proves otherwise. So you are in a good location for a long, just keep in mind it's an aggressive long. And if that's the case, then your expectations of it should be lower, right? So you target lower price targets. You target things that are more reasonable, like the midpoint, for example, okay? You can take this low to this high, right? And you just take the midpoint of that and say, okay, midpoint is within reason, even if it's a counter trend trade. That's pretty within reason. So that's how you can target something like that and get a reward risk that you can measure or quantify. Does that make sense? So that's Alphen. Thank you for asking about that. So let me go over here to TradingView and see what you guys have to say. By the way, if you like my stream, please press the like button. Please press the boost button. Please subscribe to the channel. It will help me out. I am going to be producing other types of content. I just haven't gotten around to it yet because I have all this other stuff. But the more you can help me out with the channel, the better. So thank you for that in advance, and I appreciate that. Okay, so let me see what I got here. Norway. All right. Hey, welcome. Okay, try it. So if that could be a TradingView thing, if it just have to try refreshing it. Hello from the west coast of Canada. All right, Bergs, cool, good to see you. Kahoot, Norwegian stock. Okay, Hot. This is this it? Let's see. What's the symbol on that? Hot. I have Kahaku. Yeah, maybe you can give me. Is that the correct symbol? KAH. I don't see that here. I see Kohoku. So maybe you want to give me another symbol or something that I could use for that. Thank you for asking. Let me know. Say, Tony, do you see BTC visiting 12 to 15K range at all? Okay, Tony, you know what? That's a good question. I saw some nonsense on YouTube about that. Okay, they're saying that before Bitcoin goes to 100,000 or whatever, it's going to go to 13K. I don't know where people come up with this nonsense. First of all, there's no way to know. Okay, first of all. Anything is possible, but these forecasts that they come up with are complete nonsense. They just do it for attention because markets are random. Okay, there's no way to know. Things change. Just like the clowns that were calling for Bitcoin 40K 3 months ago, right? No one foresaw this banking situation, first of all. So now, of course, they're going to come out and say, see, I was right. Look at that. The market's strong. I told you I'm a good forecaster. They're just pulling your leg. They're just taking advantage of your ignorance. There's no way to know. Now, if they were able to say, we're going to have a banking situation in March, now that's a piece of useful information if they said that back in January, because no one saw that coming. Okay. In fact, I saw a video of a high profile guy. You probably know who I'm talking about. And he was touting SVB as a great stock and you should buy this stock. That just goes to show the mentality, right? So no one knows. And meanwhile, there were red flags if you bothered to really investigate the stock. But who's going to do that, right? No one's going to look into their footnotes of their quarterly reports. I mean, who's going to do that? So anyway, so to answer your question, there's no way to know. Is it possible? At this point, structurally, it's not reasonable. Okay, so people that are thinking, oh, I'm going to short this thing, it's an ineffective mentality because you are fighting this momentum. Okay, you have to respect the momentum. Number one. Number two, you are fighting a very unusual fundamental situation. Okay, the reason why this thing is vertical is not just short covering. Initially, I thought, oh, okay, it's just the shorts getting squeezed, but this is more than short covering. This is a run for safety. Okay, so when you have something like that, forget technicals. I mean, you can't sit there and say, oh, it's too high. If that run for safety continues, this thing can go higher, right? So you have to respect the momentum. That's why that short-term mentality with no opinions, it helps a lot. It helps me a lot because, for one, by respecting the momentum, it aligns me with what the market wants to do, not what I think it wants to do. Right? So you have to be a follower in this game in that sense. You follow the market. You don't lead the market. We don't lead the market. We follow it. Okay. What you should not follow are what other people say. That's what you should not follow. Okay. So good question. Let me move along here. Let me see what else I got on YouTube. All right. Alex, can you take a look at Heart USDT? It's an AI project. Okay. Massively hyped. Yeah, I know with that GPT-4 now they have. Okay. First of all, if it's overly hyped, right there, that's a red flag, right? So let's take a look here. I guess it's called Humans against Tether. Is there another exchange? Let's see. Do I have another exchange on here? Not really. USDT. No. All right. So I guess we can look. Oh, we got Binance. Oh, what is that? Oh, that's a premium index. Okay, never mind. So Heart, right? First of all, this right here, this looks like the Bitcoin run, okay? This is not nice pullback. Right off the bat, I can see what I can see here. First of all, let's go to a weekly chart, okay? And let's just go back a bit. Man, this thing was much higher. Gee, look at, oh man, how high was this thing? All right, hold on. I'm still trying to get this thing on my chart. Is this real? Is that for real or is this a bad tick? Let's see. What is that? $1.50 was its high, and this thing is it's a half a cent. It's 1.5 cents. No, sorry, it's way out. It's 1.5 cents. It went from $1.50. I don't know if this is true. I don't know if that's a real tick or maybe that's a bad tick. But it went from there to a cent and a half. Okay, a penny and a half. That's bad, first of all. Okay, so you got a lot of people stuck in this thing, most likely. What you have here, this is a weekly chart. Okay, this basically went to zero. Basically, you have this little blip. Okay, which could be a wave one of a new wave structure. That could be a wave one. This is possibly a wave two. If it cannot take out the low of wave one, if it cannot take out this low, then you have a higher low, which can be a wave two. If that's true, then you're looking at the potential of a wave three. So in that case, you can measure some levels here and you could say, well, what are some reasonable levels? Look, there's an old resistance right here. What is that? At 5 cents, 5.5 cents. That's pretty reasonable, right? If it can work its way up there over the next few weeks. So you have that possibility. It's in position for that. So if this is a hype coin, and these things are getting hyped on whatever, I mean, that's theoretically that's the next technical leg that can unfold. So if you're interested in working with that, I mean, the key thing is not the map, not the profit map. Everyone wants like the profit. Really, you should be looking at the risk. So these are usually not great for swing trades. If that's the case, right, if you're looking at more of a position type trade, then for one, you should be eyeing this support, giving it a chance to test that. What is it? 0.125, okay, 1.25 cents, whatever, right? Give it a chance to test that, because this structure is still, this corrective structure is still in play. Hasn't taken out any resistance levels, right? You have a resistance there, you have a resistance there. Until it starts taking out resistance levels, give it a chance to test support levels. And when if it can test support levels, that would be a good place to accumulate some if that's what you're interested in. Okay. Now, here's the thing. If you accumulate some, let's say it pushes its way to here, okay, and it's still a corrective move, which may have a bullish move in front of it, and you purchase some more, and it keeps going. You don't keep putting on more if it keeps going. All right. You put on some, again, this, I'm not telling you how to trade. It's just a suggestion. You put on a small position. If it keeps going against you, you do not keep putting on more. You wait until resistances start getting broken, and then that would make more sense to add, because now it's going your way. But if you want to accumulate take small bites, and play that game, okay, just keep in mind, as you know, this thing can go to zero. It's practically been there before. All right, so a few things to keep in mind there. What I just described is more of an inventory game, and actually, I'm going to be making some adjustments to my strategic growth portfolio for this year. I haven't put anything into it yet because I wasn't liking the bond market over this whole quarter. Now that the bond market's giving us a new look, now I'm more interested in the speculative stocks, but I'm going to change the structure of the portfolio. So that'll be available to people that know how to access that. I just wanted to mention it. All right. So I hope that answers your question about Heart, Alex. Thanks for asking. Hey, Armin, how are you? Shell, good to see you. I watched. Oh, cool. All right, cool. I'm glad you saw that. Yeah, they do a nice job on that. And it was nice being on the show with Trader Nick there. He's definitely one of the few guys I respect in this game. You should do this more. Yeah, well, Alex, if they Trading Battle, they came to me and asked me. I would like to do collaborations or whatever with other ones, but I'm too. You have to understand, to do a collaboration, you have to have something of equal value to offer, and my channel is just not there yet. I don't have nothing to offer them, so which makes sense. I can understand. Birak, all right. Can you please check XU100? All right, so we talked about that earlier before, right? XU100, the Turkish stock market, and why it was looking so strong. Remember this? There was another guy, I forget who it was. Maybe it was what's his name? Eligius, or there was someone from Turkey. No, Levant, that's who it was. Levant used to ask me, Birak used to ask me too, during this mess here, right? This was a result of Turkish lira having problems, right? So now look at the situation now. So we have this consolidation, right, in the Turkish stock market. Here's what you have to do. Look at the levels, right? Put fundamentals aside for a moment. Look at the levels. You have a level right there, all right? And you basically have a zone. So here, I'm just going to highlight the support zone. This is simply what you should wait for. A test of this support zone. This is a consolidation. If the Turkish lira continues to go lower against the dollar, because obviously that's not happening right now at this moment, but if the dollar weakness continues, this thing may, this thing may start pushing supports, right? So this is basically, if we look at the Turkish lira, it pretty much was like this, right? Can I pull that up? I don't even know the symbol for the Turkish lira. But if it's dollar against lira, right? Basically, you're playing the dollar here, right? So dollar pulling back, this pulling back. That's what you're looking at. So you're basically playing the dollar. If this thing finds support here, most likely the dollar is finding support, right? And that's what you want to use as your gauge. If this thing breaks this area, that means the dollar is probably going lower, okay? So that's what you have to use. if you're this is not a good place for longs if you're thinking longs, because you're at the midpoint of the range. Anything can happen here. Technically, anything can happen. Up in this area, obviously there's resistance, so bad place for longs as well, right? So if you're thinking longs for stocks in the Turkish stock market, you want to at least see this area start to get tested first, right? 47.28. Does that make sense? That's what you're looking at. Can I pull up the Turkish lira? Let's see. Yeah, it is USD TRY. I mean, let's. This is the Turkish lira. Let's look at a weekly chart. I mean, and this is the dollar against the lira, right? And the dollar has been going lower. And look at this thing, right? The dollar has been going lower, and the lira is still the dollar is still stronger than the lira. So I don't know. That's a little conflicting. Does that make sense though? So I would keep an eye on those levels at least. When it's hard to put the puzzle together, the economic puzzle together, and when things aren't really making sense, just go to structure and levels on the chart. That's where charts really shine. They give us some technical levels, and we may not understand all the fundamentals that are going on, but if the levels are respected, that means something. Okay, that means something structurally, that means something internally, and we should respect that. As a technician, I mean, that's what we're taught. Market is just expressing fundamentals, right? That a chart is just an expression of them. So that's why it's okay to respect the chart in certain levels and things like that. But as you know, things change, right? So if levels break, that means it's a new piece of information. Does that make sense? All right, so I hope that helps. What do you think of Bitcoin dominance? No, I don't look at it. Thanks, Jack Sloan. People ask me that all the time. What do I think of Bitcoin dominance? It's just another layer of complexity that we don't need. Okay, people overcomplicate things. When it comes to your strategy, first of all, you need to know your strategy really well. If you're a day trader, that stuff means the least. Okay, if you're a swing trader, it still doesn't really mean anything. If you're a position trader and you're an investor and you're thinking really long term, then some fundamentals, macro fundamentals, can come into play, like what's going on with the dollar, what's going on with the bond market. That's what you should be paying attention to, not Bitcoin dominance. That's just another layer of complexity that's unnecessary. You can basically arrive at the same conclusions by looking at simpler pieces of information. Okay, cool. So you guys got that? You were answering that from before. Okay, cool. All right, good answer, you guys. Peter, how are you? All right, thanks for stopping by, Peter. Good to see you. All right. Any thoughts on housing? So Alex, I mean, I'm certainly not a housing expert, but I look at when it comes to property stuff, I consider interest rates, because interest rates are really the key to everything, especially property and borrowing money, right? So I mean, just look at the bond market. If this is the case, now people are saying, oh, properties are going to suffer, blah 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 blah. Well, that's true if rates rise. This right here, this is a 10-year note. This is not rates rising. Okay, that's rates pulling back. If rates are pulling back, and that's going to continue. If rates are going to continue to pull back, that means cheap money. Cheap money means more people can borrow it. More people borrowing money means people can buy homes, right? So if this continues higher, that would actually be a positive for properties. Now, of course, properties are very sensitive to their domestic areas, right? Like New York is not going to be the same as Ohio. Okay, so or I don't even, and that's just this country. I don't even know what's going on in Romania. All right, so and then plus you have to worry about Russia walking into your country at any moment. Anyway, so yeah, but that's what I have to say. Pay attention to interest rates for that. I think they will give you a good sign. And if these rates, if this bond price pulls back, and we're seeing bond prices back at these lows, then we're back on that bearish path for properties, in my opinion. Okay, but I think it's gonna each type of property, if it's a luxury property, if it's just a regular property, commercial property, they're all going to be affected in their own ways. Like some may be more sensitive than others. Okay, you have that's more of a specific thing. So anyway, good question. I have a question. Kind of sounds like a noob question, but when we have a big green candle like that, who is the main entity pushing prices aggressively? Okay, good question. Hedge funds buying huge? No. So let's go back to that Bitcoin chart, right? So he wants to know who's buying this. It's a combination of people. There's no way to know. There's no specific person, or we can't say, oh, all the hedge funds are buying Bitcoin, or all my rich friends are buying Bitcoin. There's no way to know. Typically, what this is obviously a majority of orders, right? Order flow. There's an imbalance. There's a lot of buying. It's a combination usually of short covering. There were a lot of shorts. Just you have to look back a couple of weeks, right? People were saying Bitcoin is pretty much going to zero. There was all kinds of bearish talk. I was short Bitcoin, or at least I called a short on Bitcoin, which again was exited here, or should have been exited there. That order was announced in advance, right? When I called the short. But the point is, there were a lot of shorts at that time. The Fed was nothing but hawkish. Powell kept saying, I'm raising rates, I'm raising rates. So not looking good for these things. And then this. So this is a combination, again, of short covering. This is a combination of running to safety. This is retail investors. This is funds. This is whatever. Okay. So it doesn't really help to try to figure out who's behind it. It doesn't matter. You can look at like a commitment of traders report. I'm sure there's one for in the futures, for Bitcoin futures, and you can see institutional versus retail, what's going on in this market. But of course, that information is old, right? But it kind of can give you an idea if you really must know. But it doesn't really matter. It doesn't really matter who. It just matters that it is where it is. Okay, so good question. President Lagarde's speech also. So yes, Dean, thanks for pointing that out. I haven't been paying much attention to the ECB speeches. That they don't seem to carry as much weight. I mean, they can affect the euro, but I don't know. Maybe in this situation they'll have more of an effect. But typically, I haven't seen any major reactions recently off of that. So thank you for pointing that out. Okay. All right, so I answered that question. So I'm back on TradingView here. Could you take a look at oil? Sure. Miriam wants to see oil. So let's see. We can go take a look at, let me see, what's US, what is it? USTI, USDI, isn't it? I forget the, no, hold on. What is the symbol for oil? I haven't looked at it in a while. WTI USD, that's it. WTI USD. So here's oil, and let's look at the weekly chart. Okay, now oil has been interesting. Oil typically should be counter dollar, all right, but it's been doing its own thing in recent time. That's why I haven't been paying a whole lot of attention to oil. If you're dealing with oil, you really should be aware of what are some of the factors that are catching people's attention. All right. First of all, OPEC meetings, any type of oil legislation or energy legislation, that kind of stuff can move oil around, right? But if you're not really in tune with that, let's see what do the levels tell us. First of all, the general trend in oil, right, has been going for some time, has been bullish, right, until it reached what is this? Basically 110. Basically, actually, let me reverse this. USD WTI, so we could see it in terms of dollars, right? It's the same chart. So yeah, 120, right? Basically 120 area. That's as high as oil has been in recent time, and it's been in this corrective mode, right? Since then, corrective mode. So you're testing supports on oil. This should certainly be for swing trades or longer term. These are places to be considering longs. But the thing is, this structure is still in play. So buying now is a little early, right? So if you're going to do something like that, it should be very small. The signal to really go long something like this, or the confirmation really that this thing is, the trend is still intact, is when it takes out a resistance level. And that's the resistance right there on oil, right? This consolidation, 82.60. So, again, this movement right here is obviously looks like a reaction of some kind, right? When it moves like that big in a short period of time, in just one day, right? That type of move. So don't get all caught up with that. Focus on the larger structures. This structure is in play until that resistance is cleared. So again, so you say, well, what about shorting this thing? It's high risk. You're shorting support levels, right? If you're going to short this thing, wait for a resistance level. If you're thinking of shorts, if you're thinking of longs, small bites, because this thing can continue lower. This thing can go to 50, okay, if this structure stays intact. So you don't want to be too big. You don't want to be leveraged in something like that and have this thing go that far, right? You get margined out. So those are really the two ways to look at it. You can be aggressive, take a small bite and see how much lower it goes, and then add to it when it breaks that resistance. Okay, when it breaks that resistance, the next thing it should do theoretically is produce a higher low. That's how you know oil is starting to work its way back up. And also think about what are some of the fundamental things that need to happen, right, for something like that to occur. Again, like I'm not really in tune with the fundamental side of oil, but you should have some scenarios in mind, okay, that should align with that type of price structure. Does that make sense? So thanks for asking about oil. All right, let me see what else we got here. Okay, so Sean, hey, good to see you, Sean. Hey, Johan, how are you? From South Africa. All right, thanks for no problem. I just tuned in. Do you think ETH BTC is also close to reversing? Okay, so Ethereum, if you're talking about Ethereum in terms of Bitcoin, I mean, I don't like these cross pairs, first of all, because they can be, I mean, look at this. Look at this. This is a mess. Okay, this is just one big consolidation, but that's typical when one can't really move faster than the other one in moving the same way, right? It's like a forex pair. If euro and dollar are moving together, right, and euro moves faster than the dollar, even though they're moving the same way, the pair should go higher, right? So this kind of works the same way. And if you're going to play this game with these cross pairs, if that's what you're referring to, just wait for levels. Okay, don't get mixed up in all this noise in between. Wait for levels. These are your levels, which means in this case, for Ethereum in terms of Bitcoin, for this to rally, you're going to need Ethereum to rise at a faster rate than Bitcoin. That's what you're going to need for this thing to do something spectacular. So just wait for levels, okay, and try to work with it that way. But again, I'd rather just work straight with the dollar because that's really a more transparent view, right? That's really more of I think just an easier idea to work with. Anyway, this can be very confusing. But anyway, good question. All right, let me see. So hey, Sean from Seattle, so gold, right? XAU USD. So I kind of touched on this earlier. Gold. This is gold against the dollar, right? Now this is basically a run for safety. That's why gold is so dramatic. But look where gold is. This is a weekly chart on gold. Look where we are. We basically, in just a matter of a few weeks, well, more than a few weeks, but maybe a couple of months there, we went from the range low to the range high. That's pretty crazy, right? And it required all these bank failures and all this bank drama to get it to do something like that. Man, so gold generally sucks. It's really out of play because this is what you need, this extreme situation to get it to move to the top of its range. Okay, fine. Either way, you're at the top of the range. Remember I remember, Sean, we talked about this a week ago. And I remember saying to you, try to hold on to it and give it a chance to the top of the range, right? I remember you told me you were taking some profits in some miners, I believe. And I think we were fooling around back here, right? And it pulled back. I mean, look where it is now. So you're at a range resistance. This thing is likely to retrace from here. I mean, just look at the history. Look at how many times it's retraced. You're in a vulnerable area. Bad place to be buying more gold. Good place to be getting out, right? Taking profits, reducing your risk on people who don't know any better. Because who else is going to buy it at these levels? You know who's going to buy it at these levels? People who watch all the gold drama, right? They get an ad on YouTube. Buy gold because gold's going to 5,000, right? And they buy it now. Oh, the chart looks strong. I'm going to buy it, right? That's who buys it, and Sean sells it to them. So, yeah, bad place to be buying gold. All right, good place to be getting out, taking profits. Well, now what about shorting? Tough short, man. It's a tough short because this thing may squeeze further. If, like I said, this goes for Bitcoin as well. If this is a run for safety, and the FOMC is going to have an effect on this most likely because it's going to affect the dollar. If this thing squeezes further, right? If the run for safety continues, shorting this is a high risk thing to do. I can understand the idea, and you're certainly at a location for a short, but you're fighting a very unusual fundamental situation. Okay, so if you're the aggressive type and you're willing to take that chance, okay, but a better thing to do, you have the sell setup developing, right? This candle closes. This is a daily chart, by the way. This candle closes and takes out the low. You have your sell signal. If you get something like that, it's not likely to go in a straight line, right? So the more conservative thing to do is to wait for something like this. Can you get a mini double top? Maybe you'll get that going into the FOMC meeting. If you go short into this and you hold into that meeting, you're basically hoping for like a vertical move, a vertical move lower. That's a risky thing to do. Okay, it could work, but you're just gambling. That's a total gamble, right? And you're just hoping that it comes out your way. That's so you have to decide. Not you, Sean, but I'm saying people that are thinking short gold. I can understand the argument, but you're up against a lot there. Okay, this is an unusual. This isn't just some typical short squeeze. This is a run for safety. All right, so please keep that in mind. I hope that answers your question. Hey, Konstantinos, how are you? Good to see you. Oh, we got Aries Bull from Spain. How are you? Mucho gusto. ¿Cómo te va? What do you think about this pump on BTC? Bull trap. Okay, so I explained all that. All right, thank you for asking. All right, speaking some Spanish there. Your A wave could contain an ABC inside and be the whole 2 corrective move. Now we are seeing a 3-star. Well, yeah. So back to Bitcoin, right? Oh, hold on a second. Put this over here. Here, so let's go back to Bitcoin over here. Okay. Right. So you're saying that, yeah, this whole structure right here, right? This could possibly be a 3-legged wave 2, a simple wave 2. It's possible, right? You got because wave 2s don't have to be 5 wave. They don't have to be 5-3-5 or 5-3-3. There's all these configurations. They could be just a 3-wave corrective move, just an ABC 3-legged waves, right? That's possible. So that is a possibility, and this could be one of a broad 3. Like I said before, I'm not getting married to that idea, but it's possible. And if the market wants to continue that way, then what we should see here is we should see like a wave 2 pullback, and that wave 2 should find support somewhere in the 25K area, right? Something like that. It should find support there if that's going to hold, and then we should get the 3 of the 3. But the argument against that, one argument is this leg, this leg here. I see 3 legs here, right? I don't see 5. I see 1. I see this little 2, right? And then this is like a 3. If that's true, if that is correct, then this is a 3-legged wave, which means it's not an impulse wave. Now, can we argue that this is an impulse wave? Let's see if it fits the rules, right? This would have to be 1. This little thing would have to be 2, right? This section right here would have to be 3 with this little tiny little blip 4. It doesn't fit the rules. You know why? Because right now, well, I guess wave 3 cannot be the shortest wave, right? So this isn't the shortest wave. Right now, this green candle is the shortest wave, if we want to look at it that way. But that would, if that's the case, if that's an impulse, that would be the wave 1 of 3, right? And there would be potentially 5 waves in there. But I don't know. When it starts getting really confusing that way, and if it's not crystal clear, then ignore it. That's what I say, right? So I'm not going to sit here and try to pick this apart and be like, okay, I figured it out, because everything hinges on this meeting that we have on Wednesday, right? All right. So good question. Hey, Kai, good to see you. All right, I'm just going back on the chat here. Let me see here. Okay. So the question came from me. Oh, Steen, right. The answer was, as far as BTC, I agree with the location. Oh, thank you, Steen. After looking at it, it appears to be an effect of the banking drama. Oh, that's what I wrote. Okay, see, I thought so. Thank you for refreshing my memory. See, so for this reason, I want to see a complex pattern develop for the short, not a single candle. All right, those are my words. Thank you for sharing. Can you check Euro USD? Yeah. So Euro USD is inverse of the dollar pretty much, right? And now this chart is not bearish, okay? You have a higher low situation right here. There's a buy signal that's in play right now. I mean, you can't buy this thing right now, but the inside bar was here, came off of the support. I mean, I haven't been able to call this because I've been just so focused on getting those auto setups or the trade scanner working. I mean, I've been pouring all my time into that. So I've missed a lot of things as a result. But yeah, you can't buy this thing right now. And this is not exactly the best choice for a short either. You have a resistance here, but there's no sell signal. There's nothing there that says go short. You know, you have the location. Thing is, you're fighting a dollar that may be unstable. If that's the case, and we have a dovish FOMC, right, and dollar gets hammered as a result, you're going to see this. So I would just let that play out. Okay, taking these forex pairs going into the FOMC is probably a bad idea. Like I said before, focus on your levels, right? If you can get another retest of this support, that might be a place to consider. And maybe that will occur if he's hawkish, right, and dollar rises and this thing pulls back, possibly, you may have that opportunity if it can produce a buy signal after that. But it's really going to depend. If he's overly hawkish, this thing can break the supports, okay? And then now you're looking at more of a bearish situation at that point. At this point, we can't say that. Does that make sense? So you're near a resistance. This thing is generally bullish. Wait for supports, okay? So good question on the euro. Hey, Kai, good to see you. Okay, what about USB Group AG? Okay, yeah, that's funny. That's funny, Konstantinos. So Kachapo, USB Group AG, USB, what is that? Let's see, USB Group AG. Is that, what is that? I don't know if, I don't see that here. USB, is that a bank or something? Maybe you could be more specific on that one. All right, let me jump over here. Let me see what else I have going on TradingView. Okay, so I looked at oil. Matic. All right, let's take a look. Matic. Are we assuming Bitcoin is going to continue to 30K, perhaps higher? Well, Suzanne, it's possible at this point, but again, everything is going to hinge on that meeting. Right now, it's in a position, Matic USD. It's in a position. Bitcoin is in a position where it's at a resistance, and I would be looking for that pullback. Okay, but if the pullback produces a higher low, 30K is not unreasonable because it is the next resistance if 28K is cleared. Okay, and a catalyst like the FOMC can lead to something like that. There's no way we could know in advance. All we know is 30K, just like 28K, 30K is a resistance. Okay, so that should be the next place where a hesitation is likely to follow, especially if we get a vertical break right through 28K, which can be the result of the meeting. So here's Matic, and let's go to the weekly chart, okay, on Matic. And you know, first of all, you're playing all these altcoins. You're just playing Bitcoin, basically, right? Now, I would think Matic should be doing a little bit better than this right now. So this is a sign of relative weakness, right? With Bitcoin vertical, this thing should be a little more vertical, don't you think? So not a good choice for longs. If Bitcoin pulls back, this thing is likely to get hammered. That's what the chart's saying. Your next support on Matic is 74 cents. Okay, so yeah, if you're thinking about long and you're thinking, oh yeah, pullback, bad idea, because when you look at these, when you judge these coins, you really should be judging in light of Bitcoin. So whatever Bitcoin is doing, this thing should do something similar. If Bitcoin is doing great and this thing sucks, that means someone is getting out of this. That means people are selling this, they're not buying it. So if Bitcoin pulls back, and Bitcoin is in a position to pull back, right? We're not being bearish. We're just saying, you know, normal healthy retracement to 25K, this thing is likely to test that support over here and possibly break it. If it does that, you have a lower high established at that point, okay? And a lower low is likely to follow in that situation. Does that make sense? So not a big fan of this one for longs. If you want to go long, if you're thinking long, at least wait for a signal at support, at least, okay? All right, let me see what else I got here. Konstantinos, that's funny. Do you think people are hedging since, yes, DJ exec, it's a run for safety. That's what I think it is, an inflation hedge. Unless the Fed signals otherwise, I think that's what people are, you know, that's what the run for safety is. Now, it doesn't mean that that's going to continue, but I think that's the initial reaction and why we see such a ridiculous move in something like Bitcoin. Okay, cool, no problem, Aries. Looks like a year-old coin that was temporarily shilled and attracted hype. It's probably going to come back. Okay, yeah, I guess you're talking about what we were talking about earlier. Okay, Kai, Ford, if you have, okay, sure. Oh, UBSG. Okay. Do you use trend lines or parallel? I don't. I use horizontal lines. I understand the channel. Look, a typical trend line, a channel, like a trend channel, that is more valuable than something like an oscillator because it's projecting prices into the future, and you have some good reference points looking ahead rather than looking behind. But I prefer to use the horizontal lines because they're actually places where some type of action took place. You can use both, but I prefer the horizontal lines. The channels can be very confusing at times, especially when they break somewhat and you have to adjust the channel. That's why I prefer the horizontal. But good question. All right, so a couple more. I got to wrap this up, man. I talk too much. Okay, so let me see. Do I have a potential buy signal on silver weekly? I have bought HUT. Should I hold or sell? Okay, I can't answer all these questions. Okay, HUT. I can't tell you if you should hold or you should sell. I'm not going to have time to look at that chart, but thank you for asking. If you want, send me a private message or something. Maybe I can take a look at that. We have potential to buy a signal on silver. Well, look, so again, gold and silver, right? Look, here's AG. Okay, look at this. Silver pulling back. Is that right? Let's look at the weekly real quick. I mean, so this is silver. What is going on here? Is this must be after hours or something, or maybe that's a bad tick. I don't know what that is. Maybe that's their quarterly report. But if gold is going higher, silver's going higher. If gold pulls back, this is likely to pull back too. All right, it's a silver miner, and gold is in a position to pull back. So I wouldn't be chasing AG, that's for sure. And so I wouldn't say potential buy signal on AG. I mean, look. So I mean, back to that weekly. I mean, look where you're buying this thing, right? On AG, potential buy signal. Why would you buy this thing here, right? That's a really high risk place to be buying AG. You should be looking for a support level at least, not this. Okay, you're buying into you're buying into this area right here. This is a potential resistance right here. That's what you're buying into. So I would definitely say no, not a buy signal. Okay, so let me see UBSG. Okay, real quick, what's going on here? UBS Group. Okay, this is a weekly. Nice pullback. I guess this is the bank. Okay, so as we all know, banks, all banks are feeling some pain. You got to be careful with the bank drama. Okay, pulled into a support. You got this dramatic candle that it gapped and then turned around. Is that what's going on here? Let's look at the daily chart. Yeah. So you sort of have like an outside bar situation, but it hasn't really engulfed any previous candles, I guess, because of the gap. You should let these things settle a bit, right? But if you're going to get involved in this, at least wait for a break of the high. But you're taking a lot of risk. That's a very wide candle. Okay, that's really all I can say about that right now. Let me just do Ford real quick because Kai has been a long time follower. Wrong symbol, F. Okay, now let's take a look at the weekly. So look, Ford. Wow, what an interesting level on Ford. Now here's the thing with these car manufacturers. Interest rates, right? Now, as we saw with the bond market, typically they borrow a lot of money, as we know, okay? And look, you're at a very, very significant support level here. So I think that if the rates continue to come off like they are, this is not likely to go a whole lot lower, unless, of course, they have some bad quarterly reports or something, but you are at an attractive level. And this is not exactly, it's a corrective structure, okay? But look at the consolidation. I mean, you can argue that this is a higher low consolidation, right? And you're in a situation where the bonds are letting off, right? Rates are improving. They're getting better. So this may not be a bad choice, Kai, for a long. It's just you don't have a long signal in play right now. That's the only problem with this, but you definitely have a location. So you get like an outside bar developed there, or maybe a bullish pin bar or something. This may be a good spot for Ford. Just keep in mind though, if the rates continue, because we are technically still in a rising rate environment, if the rates continue, they will put pressure on these car manufacturers because they borrow a lot of money. So just keep that in mind. That's why I hesitate with something like this. until I see really confirmation from the bond market. Now, it looks like we're getting there. And of course, it's not going to be a one-to-one thing, right? It takes time for that bond market effect to be felt, which means Ford can break, right? It may break the support. And if you see something like that, the next best opportunity would be a failed low. Like if you get a failed low in this area here, because you know what happens? Everyone bangs it out, people get short, and then it's wrong, right? It becomes an imbalance and then they get caught. So that might be a good long opportunity if you're thinking of something like that. It's just there's nothing there at the moment in terms of actual setup. Okay, you just have a great location and an interesting situation. All right, so I definitely like the idea for a potential long. I'm definitely not thinking short on that. Now if it breaks and it really follows through, then I'd step aside. Okay, like meaning it clears this area and there's no recovery, nothing. Just step aside. But I would think that it would be the chances of this thing turning bullish are somewhat better if the bond market can support you. Does that make sense? Okay. Okay, cool. So, all right, you guys, any other questions? Let me see if I missed your question, I apologize. I can't answer all the questions. I stream here every Monday, so you can come back and you can ask me again. Let me see if I missed anything here on TradingView. Okay, so where do you think Bitcoin is going by next week? Okay, I think that's thank you for asking, because that was the title of the stream. Okay, so let me answer that. Where do I think Bitcoin is going for next week? Now, I always give people a hard time for trying to forecast markets a long time out, but that's a long time out, right? A couple of months, it's unknown, but a week or two is within reason. Okay, so let's take a look here. Let's go back to the daily chart. And here's the thing. So what's possible, right? You want to look far out. You want to see the levels. So if this continues, it's hard to believe that this will continue at this rate, because I mean, look where we are. Just look where we are. Okay, look where Bitcoin is touching, right? This is what it's touching right now. You see this old consolidation? That's an area. Okay, that was a previous level that was relevant. So by next week, we can be at the top of that area, possibly, okay, up in this area if it wants to continue, right? Which is what? 31.9. So I would argue 30K is a possibility. I can't say that with any certainty because we don't know what the FOMC is going to be, right? If the FOMC comes out very dovish, that's a possibility. And that's why it's a bad idea to short this thing, okay? And you say, well, I'll buy it then. But if you're going to look for the longs as a swing trade, it's high risk because this entire area is high risk. So you have to think smaller time frame, okay? But that's a possibility. That's a level. The other level is 25K, okay? So that's possible in a week. Both of those up. Now you say, oh, well, so it's either long or short. Well, I can't give you any certainty because I don't know, right? The market can only answer that question, not me. But what I can do is figure out a reasonable range, and that's 25K or basically 30 or 31K, right? Those are the levels you should be watching for. As a trader, especially as a day trader, that information can be very helpful when you're gauging your risk and you're gauging your reward potential. Now, that doesn't mean you're going to take a day trade and say, okay, I'm going to hold it to 30K and see if it works. That's not how it goes. It just shows you that that's the kind of potential you're looking at, rather than, are you buying right into a resistance? I mean, at this point you are, but if it clears it and you're looking at like 28.5, 29, then that puts 30, 31K on the reasonable radar in a week. Okay, does that make sense? So you can never look at one side. You have to look at both sides. And since this thing is generally bullish, there's a decent chance, but look at the location. Okay, so that's why I have to say both numbers. Does that make sense? All right, so I hope that answers your question. And that's where it could possibly be by next week, because that's a reasonable range. All right, you guys. So I hope you found this useful. Again, press the like button, subscribe to the channel. If you have any questions, you know where to find me. Check the links in the description, and you can send me a private message in the Discord community. I try to answer those as quickly as possible. Okay. So everyone, thank you again for your time. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.